Today in Crypto. By Yasin Ebrahim Investing.com, Bitcoin rose 4% Monday as dip buying prevailed following its recent pullback, and the latest data on its blockchain suggests traders should buckle in for further swings before the popular crypto makes record highs again. Bitcoin rose 3% to $63,041 to trade close to its all-time high of $66,967.1 seen October 20, despite cooling off somewhat following the recent pullback to $60,000. Bitcoin's funding rates, or the cost of holding long positions in the futures listed on exchanges, remains near all-time highs. History suggests that elevated funding rates are often followed by market sell-offs to ease some of the exuberance or leverage bets on BTC. Both the September slide and the May bloodbath were preceded by heightened funding rates. Funding rates remain at similar levels as observed just prior to the early September flush-out. With futures open interest remaining near all-time highs, a risk of further downside to clear even more leverage does remain in play, Glassnode reported Monday in its weekly on-chain report. Any downside wobble, however, will likely be met with a wave of demand as on-chain data, which detail key developments in Bitcoin's network, points to slowdown in profit-taking by long-term investors. Long-term holder spending behavior appears to be slowing down as conviction returns during the recent pullback, Glassnode said. Long-term holder supply declined by around 39,500 BTC over the last 2 weeks, but have already starting to recover, indicating that the vast majority of coin holders are still expecting and waiting for higher prices, it added. In another sign of healthy demand, crypto markets continue to attract investment dollars, with a record $1.47 billion of new money flowing into digital asset investment products last week. Report Monday by Quant shares showed BTC's market cap climbed to $1,186 trillion, taking the total market cap to $2,614 trillion, just below its all-high of $2,681 trillion. The cryptocurrency market is abuzz on October 25 as the sight of multiple altcoins hitting new all-time highs in Bitcoin's BTC returned to $63,000 has traders looking for a resumption of the bullish uptrend. Data from Cointelegraph Markets Pro and TradingView shows that the biggest gainers over the past 24 hours were PARSIQ, Handshake, HNS, and Near Protocol, NEAR. Continue reading on Cointelegraph. On-chain data may suggest short-term Bitcoin holders could be behind the latest correction in a cryptocurrency's price. As pointed out by a CryptoQuant, on-chain data may hint that selling from short-term holders might be the drive behind the recent correction. The relevant indicator here is as the above graph shows, when Bitcoin made its new ATH around $67,000, the STH-SIPR's value also showed a significant spike up. This implies that these short-term investors took the opportunity of BTC's big move up to realize some of their profits. And with the timing of the correction following soon after, it's possible the cause of the dip was this selling by these investors. Related reading: Can Coinday's destroyed indicator predict Bitcoin tops? At the time of writing, Bitcoin's price floats around $63,000. Up 1% in the last 7 days. Over the last month, the crypto has accumulated 49% in gains. Here is a chart showing the trend in the value of the coin over the last 5 days. A few days ago, Bitcoin successfully set a new all-time high, ATH, of around $67,000, but it didn't take long until the crypto's price saw a correction. It's possible that this dip was caused by short-term holders, as the previous chart hints. Long-term holders remaining bullish can take BTC to even higher ATHs. And looking at the price chart, it may seem that the recovery has already begun. On-chain data shows a recent rise in the number of stablecoin addresses sending to exchanges, suggesting an increase in dry powder supply pumping into Bitcoin. As pointed out by a CryptoQuant post, the number of stablecoin addresses making inflow transactions to exchanges saw a sharp rise yesterday. Stablecoins are tokens that have their values tied to a fiat currency. Since they are relatively stable, as their name suggests, Investors like to use them for temporarily pulling out of volatile markets like Bitcoin. The all stablecoins, all exchanges and flow addresses count as an indicator that shows the total number of these fiat token addresses that are sending their coins to exchange wallets. A spike in the metrics value means there is an increase in the supply of stablecoins for transferring to other cryptos. This could suggest investors believe now may be a lucrative entrance into volatile markets, and so they are converting their fiat-tied coins to BTC and other cryptocurrencies. They may also be looking to withdraw the coins into fiat. Related reading: Bitcoin bullish signal. Whales are building their positions on derivatives now. Here is a chart that shows the trend in the indicator's value over the last week. As the above graph shows, the indicator showed a very large value yesterday, implying that a lot of investors sent their coins to exchanges at that time. The reason behind the trend could be the recent correction that Bitcoin suffered after making its new ATH. Investors may be bullish on the future price of the coin and find that this dip is a good buying opportunity. One thing should be noted is that not the entire stablecoin supply moving into exchanges will be pouring into Bitcoin. A percentage of them will go into altcoins and another will be withdrawn into fiat or kept on exchanges. Related reading: Is China considering lifting the Bitcoin mining ban? The NDRC runs public survey nonetheless. A surge in the total supply is still a good sign for BTC and may help the coin bounce back from the correction. Sustained such inflows can prove to be bullish and take the crypto to higher all-time highs. ATHs. At the time of writing, BTC's price floats around $63,000, up 4% in the last 7 days. Over the past month, the crypto has gained 48% in value. The below chart shows the trend in the price of the coin over the last 5 days. In a calendar year, the total crypto market capitalization more than quadrupled from $361 billion to more than $1 trillion in January, reaching an all-time high of around $2.6 trillion in May. Just weeks later, more than $800 million was wiped off of the total crypto market cap, representing a decrease of over 33%. Volatility of this magnitude in the crypto markets is nothing new, especially for those battle-tested by market cycles of years past. However, research indicates that the global number of blockchain wallet users increased by more than 25 million since March 2020, meaning this is just the first roller coaster ride for 25 million new entrants. Doug Leonard is the CEO of Hi-Fi Finance, a fixed-rate, fixed-term lending protocol built on the Ethereum blockchain. Doug holds a BS in Information Systems and a master's degree in Management Information Systems, both from Brigham Young University. Before being named CEO of Hi-Fi Finance, Doug spent a year as a senior software architect at Mainframe. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.